Sonal Varma, the India Economist at Nomura Financial Advisory, is with us. Good morning, Sonal. Well, that's a fairly exciting number. 5.9 is what you're expecting to be announced on Friday. And for the full year itself, 6%. Would you want to rethink any of this in the light of what the Supreme Court did yesterday?
Yeah, I think, the Supreme Court verdict aside, in general, the growth numbers have sort of surprised us on the positive side. And, the IP numbers has happened even before the election outcome. So the second quarter for the calendar year or the first quarter for the fiscal year, the June quarter, the industrial side actually has surprised us on the positive side. And we've seen all the upstream sectors, including coal, actually participate. Now, unless, the coal allocations, obviously a verdict will happen, and at some point in time, the bidding process, and there will be allocation that will happen, and we are assuming that there is no disruption on the infrastructure side which happens as we go forward. But I think broadly a cyclical recovery in the economy actually started even before the elections, and we are fairly confident that we will see a broad pickup in the growth cycle. And like I said, we were positively surprised by the June quarter numbers when we actually did a bottoms-up forecast. It ended up being more than 100 basis points above what we had earlier penciled in. So I think as the growth numbers come out on Friday, we are likely to see more consensus growth forecasts actually get upgraded.
Okay. Sonal, hi, morning. I don't know if you've actually done any analysis on what the impact would be on the GDP if this, blanket deallocation of mines is done, or if there is a case-by-case, deallocation taken up. Any kind of numbers that you can throw at us at what the impact could be?
No, we've not done any such analysis, and our report has come out on Friday night, before the decisions came out. But like I said, the question is whether there will be a complete disruption for the next, a long period of time in terms of availability of coal, or will companies look for imported coal, and therefore generation will still go on. So we'll need to see how this actually process pans out. It's too early to assess the impact.
No, that's a fair point. All of us actually waiting and watching to see whether any production will stop at all. There is still legal lack of clarity on whether illegal means stop mining. Even that we're not sure for now. But Sonal, you've said 5.9% for the number that will come out on August 29th for the quarter ended June 30th. How about the remaining? Are you expecting something like 5.9 in every quarter because your average is 6?
Yeah, I think, obviously agriculture is sort of a disappointment, or rather is going to be a disappointment this year. So we're expecting agriculture growth actually to be close to zero this year. But on the non-agriculture side is where the pickup is likely to happen. So in the March quarter, non-agriculture GDP growth was between 4.5% to 5%. And for the June quarter, we are expecting non-agriculture GDP growth of about 6.5%. And looking ahead beyond the June quarter, we are broadly expecting non-agriculture GDP to pick up from around 6.5% to closer to 7% by the end of this fiscal year. So there is actually a broad-based pickup in the economy, notwithstanding, sort of a flattish quarterly GDP numbers. And I think it's, led, of course, one by the consumer discretionary side. The car and two-wheelers are very visible to that extent. But also on the medium and heavy commercial vehicle side, which if you look at the past business cycles has been one of the key leading indicators of the economy for the manufacturing and the transportation side, and that is starting to move in the positive territory after many quarters of negative territory. So plus, of course, on the infrastructure side, the indications are that the government is looking at resolving the bottlenecks. So those three segments are already seeing a pickup. But what I would like to highlight is that, typically in all business cycles, whether it's on the uptake or on the downtake, they're always led by the industrial sector. So we need to watch out for how the industrial growth numbers pan out, and most of the leading indicators that we track are pointing to a significant pickup in the industrial cycle in the next 6 to 8 months. And what usually happens is that once the industrial cycle picks up, you tend to see the services sector that that are dependent on industry, like transportation, trade, etc., pick up as well. And therefore, it does look like that we are at the cusp of a multi-year, I would say, pick up in the growth cycle. And I think the first glimpse of that we will have on Friday.
Is there any downside risk to your 6% GDP target for FY15 that could come in from global shores?
So global, our assumption is that global growth will marginally pick up as we go ahead. Europe numbers have been a bit disappointing, but Japan, after the consumption tax impact in the second quarter, we are expecting growth to pick up. China also, second half of 2014, because of the policy easing measures, we are expecting a growth rate of about 7.5%. And US, our expectation is around 3% growth. So broadly, global growth, as we estimate, should inch higher. To 2013, I think global growth was around slightly under 3%, and we're expecting global growth of around 3.3% for 2014, which is not a big uptick, but a marginal pickup in the global growth environment. So global factors, definitely, we are assuming a moderate expansion. At this stage, I don't see any downside risk to our growth estimates.
Well, time permitting, I will come back to the slowdown story. But first, the other big hurdle, inflation. How do you see CPI progressing? We don't seem to have had much luck with vegetable prices in this month either. So how do you see the trajectory of inflation, the action of the Reserve Bank, and are you factoring any help from the Reserve Bank in your GDP tally?
No, we're not, I mean, the assumption is a prolonged period of pause from the Reserve Bank of India. So this is not premised on any, monetary easing coming through. It's more the government action and therefore, efficiency/productivity gains on the investment side, which is driving the pickup, plus the sentiment pickup and its impact on discretionary demand that we are penciling in. But specifically on the inflation thing, outlook, obviously the vegetable price increases are sort of shadowing the underlying trends that are visible. And the underlying trend for the last 12 months has been towards disinflation. And, to estimate this underlying trend, what we estimate is this sort of a 20% trimmed mean measure of CPI. So we remove the 10% of very high and very low inflation volatile components. And what we get actually is that the underlying trend in CPI inflation right now, which was closer to 8% around, 9 months back, is between 7 to 7.5%.
Okay.
So there has been a broad-based moderation in CPI, and our expectation is that CPI will undershoot the 8% trajectory by first quarter of 2015 versus the 8% target. I think the uncertainties start to increase as we move from 8 to 6, and a lot depends on whether we get to 6 or not. Actually, a lot depends on government policy actions on the supply side, particularly on food inflation. The current framework, you have output gap, of course, which is going to narrow down from negative, but minimum support prices are under check. Nominal rural wages, which were growing at 20-25%, have come down to closer to 10% right now, and our assumption, like I said, is that the RBI is going to stay on a prolonged pause, so real interest rates are going to become positive. So in that framework, we think the broad direction for inflation is down. But whether it hits 6% or not, that does depend on the supply side measures that the government takes. So we'll have to see how that pans out.
Fair point. Sonal Varma, it was a pleasure speaking with you. Thank you very much for joining us with your report. That's actually declaring very good news for the economy, 6% GDP growth this year.